Gold is crashing right now. Not slowly, not gradually, crashing. We are talking about hundreds of dollars wiped out in days. Silver is down over 30% from its highs. And this is happening while bombs are falling, while warships are being destroyed, while the world is literally on fire. And everyone is blaming the war. Every single headline you read right now says the same thing. War uncertainty, geopolitical tensions, market fear. That is what they are telling you is crashing gold and silver. They are all wrong. Every single one of them, and I am going to prove it to you in the next few minutes. I am going to show you the real reason gold is crashing. I am going to show you the one chart that explains everything. And I'm going to show you why understanding this changes everything about how you should be thinking about your money right now. But first, let me ask you something. Does it make sense to you that gold goes down during a war? Think about it. What is gold supposed to do during times of crisis? What have you been taught your entire life? Gold is the safe haven. Gold is the protection. Gold is what you buy when the world is falling apart, right? So explain this to me. Explain why gold dropped $400 in a single day while missiles were flying. Explain why silver crashed nearly $20 while submarines were sinking warships. Explain why the one asset that is supposed to protect you during chaos is getting destroyed during the biggest geopolitical crisis in years. It does not make sense unless you know where to look. And that is the problem. Everyone is looking at the wrong chart. Everyone is watching gold. Everyone is watching silver. Everyone is watching the war headlines. And nobody is watching the one thing that actually controls the price of everything, the dollar. That is it. That is the secret hiding in plain sight. The dollar is crashing gold and silver. Not the war, not fear, not uncertainty, the dollar. And when I show you what the dollar has been doing, everything you have seen in gold and silver over the past few weeks is going to make perfect sense. The confusion is going to disappear. The frustration is going to turn into understanding. And you are going to see the market completely differently than you did before you clicked on this video. Here is what happened. The dollar index was sitting around 95 a few weeks ago. Gold was near all-time highs. Silver was flying. Everything was moving exactly the way the textbooks say it should. Weak dollar, strong metals. Simple. Then the dollar started moving, quietly at first, then faster, then violently. The dollar index went from 95 to 99. That is a 4% move. 4%. That sounds small, right? What is 4%? 4% on the dollar caused gold to crash over $500. 4% on the dollar caused silver to lose 32% of its value. 4% on the dollar wiped out months of gains in days. That is the power of the dollar. And nobody is talking about it. They are all talking about the war. They are all talking about missiles. They are all talking about fear and uncertainty and geopolitical risk. And they are completely missing the only thing that actually matters right now. The dollar is at 99 and heading toward 100. And if you do not understand what happens at 100, you are not prepared for what is coming next. Because 100 is not just a number. 100 is a decision point. 100 is where the next move in gold and silver gets decided. And I'm going to break down exactly what happens in both scenarios. But first, I need you to understand why the dollar is doing this. Because the reason is not what you think. It is not strength. It is not confidence. It is mechanics. It is plumbing. It is the way the entire global financial system is wired. And once you understand the wiring, you will never look at gold and silver the same way again. Let me explain something that most financial media will never tell you. Gold is priced in dollars. Every ounce of gold in the world, whether it is sitting in a vault in London or being sold in a shop in Dubai or being mined out of the ground in Africa, is priced in United States dollars. That means when the dollar gets stronger, it takes fewer dollars to buy the same amount of gold. The gold did not change, the demand did not change, the supply did not change. Nothing changed except the measuring stick. And right now, the measuring stick is getting longer. Every single day, the dollar gets stronger. Gold looks cheaper on paper. Not because gold is weak, because dollars are strong. Let me give you an analogy that makes this crystal clear. Imagine you own a house. Beautiful house. Same location, same size, same neighborhood. Nothing changed about the house. But the currency you used to measure the price of the house just got 4% stronger. What happens to the price of the house on paper? It goes down, even though nothing about the house changed. Even though the house is exactly as valuable as it was before. The number on the screen went down because the ruler you are using to measure it got longer. That is what is happening to gold right now. The house is fine. The measuring stick changed. And if you sell the house because the number went down, you just sold a perfectly good house because you did not understand that the ruler was the problem, not the house. That is the mistake millions of people are making right now with gold and silver. They see the price going down. They see the war getting worse. They cannot reconcile the two. So they panic. Do not panic. Understand, this is finance currency. And today, I am going to make sure you understand exactly what is happening and exactly what comes next. Stay with me. Now let me explain why the dollar is surging, because this is the part that connects everything. This is the part that nobody else is breaking down. And this is the part that is going to make you smarter than 99% of the people watching gold and silver right now. There are 4 forces pushing the dollar higher at the same time. Not 1, not 2, 4. And they are all hitting simultaneously. Let me walk you through each one. Force number 1, safe haven flows. I know that sounds backwards. Gold is supposed to be the safe haven, right? That is what we have been taught. That is what the textbooks say. When crisis hits, buy gold. But here is what the textbooks do not tell you. The United States dollar is still the world's reserve currency. 70% of all global trade is settled in dollars. Every barrel of oil is priced in dollars. Every major debt instrument is denominated in dollars. The entire global financial system runs on dollars. So when a global crisis hits, what is the first thing international investors do? They buy dollars. Not because they love America, not because they trust the government, not because they think the economy is great, because they need dollars. They need dollars to settle trades. They need dollars to pay debts. They need dollars to meet margin calls. They need dollars to buy oil. The demand for dollars during a crisis is not emotional. It is mechanical. It is the plumbing of the global financial system demanding more dollars because that is what the pipes are built with. And right now, with a war raging, with shipping disrupted, with oil prices spiking, the demand for dollars is through the roof. Force number 2, the central bank is frozen. The market was pricing in multiple rate cuts for this year. Everyone expected lower rates. Lower rates usually mean a weaker dollar. That was the playbook everyone was following. Then the war happened. War disrupts shipping. Disrupted shipping raises costs. Raised costs mean higher prices. Higher prices mean inflation. And inflation means the central bank cannot cut rates without making things worse. Every single day this war continues is another day rate cuts get pushed back. Every day rate cuts get pushed back is another day the dollar stays strong. Every day the dollar stays strong is another day gold and silver get hammered. The war is not helping gold. The war is trapping the central bank. And the trapped central bank is helping the dollar. Follow the chain. War creates inflation pressure. Inflation pressure freezes the central bank. Frozen central bank keeps rates high. High rates support the dollar. Strong dollar crushes gold and silver. That is the chain nobody is showing you. That is why gold is going down while bombs are falling. Force number 3, trade policy changes. New tariffs are coming. 15% global tariffs starting within days. What do tariffs do? They make imports more expensive. More expensive imports mean higher prices. Higher prices mean more inflation. More inflation means the central bank stays frozen even longer. But tariffs do something else that most people miss. Tariffs reduce the trade deficit. A lower trade deficit means fewer dollars leaving the country. Fewer dollars leaving the country means the supply of dollars overseas shrinks. When supply shrinks and demand stays the same, price goes up. The dollar gets stronger. Tariffs are rocket fuel for the dollar. And they are starting at the exact same time as a war is raging and inflation is spiking and the central bank is frozen. Every single one of these forces is pushing the dollar in the same direction at the same time. That is not coincidence. That is a perfect storm. Force number 4, economic resilience. This one is going to sound crazy, but look at the data. The service sector just showed expansion at the fastest pace in years. Unemployment claims came in below expectations. Productivity rose more than forecast. Job cuts declined sharply. The economy is not breaking. In the middle of all this chaos, the economy is holding up, and a strong economy during a crisis means even less reason to cut rates, even less reason to weaken the dollar, even more support for dollar strength. Every piece of positive economic data is another nail in the coffin for rate cuts. Every nail in the coffin for rate cuts is another boost for the dollar. Every boost for the dollar is another hit to gold and silver. Now combine all 4 forces: safe haven flows pushing dollars higher, frozen central bank keeping rates elevated, tariffs reducing dollar supply overseas, strong economy removing any reason to change course. 4 forces, same direction, same time. That is why the dollar went from 95 to 99 in weeks. That is why gold crashed hundreds of dollars. That is why silver lost 1/3 of its value. It is not the war crashing your metals. It is the dollar. The war is actually the reason gold should be higher. But the dollar move is so powerful, it is overpowering the war bid. Let me say that again because I need you to really understand this. The war is bullish for gold. The dollar is bearish for gold. Right now, the dollar is winning. The dollar is stronger than the war. That does not mean the war does not matter. That does not mean gold is broken. That means the dollar is that powerful, and it will not be this powerful forever. The question is timing. The question is, when does this flip? And the answer lives at one level on the dollar chart, 100. Watch that level, because what happens there determines everything. Let me tell you why everyone is getting this wrong. Because understanding their mistake is going to protect you from making the same one. The mainstream narrative right now goes like this. War creates uncertainty. Uncertainty creates fear. Fear creates selling. Selling crashes prices. Therefore, war is crashing gold and silver. That narrative sounds logical. It feels right. It matches what we see on the surface. War started, gold crashed. Simple cause and effect, except it is completely backwards. War does not create selling in gold. War creates buying in gold. That is the entire point of gold. That is why gold exists as an asset class. That is why people have been buying gold for thousands of years during times of crisis. If war crashed gold, gold would be worthless as a safe haven. The entire premise of owning gold would be destroyed. But that is not what is happening. Gold is not crashing because of war. Gold is crashing because of what the war is doing to the dollar. There is a massive difference. Let me break down the logic chain that everyone is missing. War disrupts oil supply. Disrupted oil supply raises oil prices. Higher oil prices create inflation. Inflation freezes the central bank. Frozen central bank keeps interest rates high. High interest rates strengthen the dollar. Strong dollar crashes gold. War leads to gold crash. But not directly, through the dollar. The war is 5 steps removed from the gold price. The dollar is 1 step removed. Everyone is looking at step 5 and ignoring step 1. Here is another way to see this. Ask yourself a simple question. If the war is crashing gold, why is physical demand for gold exploding? Right now, in Asia, physical premiums on gold are at record levels. In India, gold went from trading at a discount to trading at full price in 48 hours. Dealers cannot get enough physical metal. Buyers are lined up. Demand is screaming. The physical market is saying gold should be higher. The paper market is saying gold should be lower. Both cannot be right. The answer is the dollar. The paper market is priced in dollars. When the dollar strengthens, the paper price goes down. The physical market is priced in local currencies. When the dollar strengthens, local currencies weaken. So in local currency terms, gold is holding up much better than the dollar chart shows. The disconnect between paper and physical is not a glitch. It is the dollar distorting the measurement. If you only look at the gold chart in dollars, you see a crash. If you look at gold in rupees, in yuan, in yen, and most other currencies, you see something much different. You see gold holding its value while currencies collapse against the dollar. The dollar chart is lying to you, not intentionally, just by nature of how it is constructed. It is showing you gold in terms of the one currency that is getting stronger. Of course, the number goes down, but the value is not going down. The purchasing power is not going down. The measurement is distorted. This is why I keep telling you that you need to watch the dollar if you own gold and silver. You can be completely right about the fundamentals. You can be right about war. You can be right about supply deficits. You can be right about industrial demand. You can be right about everything and still lose money in the short term if the dollar moves against you. Being right about the thesis and being right about the timing are two different things. The thesis for gold is intact. War, inflation, supply constraints, physical demand, central bank buying, all of it still true. None of it changed. But the timing is being controlled by the dollar, and until the dollar reverses, the short-term price pressure continues. This is not a reason to panic. This is a reason to understand. Before I continue, I want to ask you something personal. How many children do you have, and would you advise them to invest in gold and silver in the future? Think about it. Think about what you are learning right now. Think about whether this information would help them. Drop a comment below. Tell me how many kids you have. Tell me whether you would guide them toward precious metals. And tell me where you are watching this from right now. I want to know where this information is reaching, because this matters. This is generational knowledge. The relationship between the dollar and gold is not taught in schools. It is not covered in mainstream media. But it determines how wealth is measured and preserved across decades. Your children will live in a world where this relationship matters even more than it does today. Whether they understand it or not will shape their financial future. So comment below. Let me know your thoughts. And if this is making sense so far, if you are seeing the market differently than you did 10 minutes ago, hit that subscribe button right now. Finance Currency is the channel where we break down the mechanics behind the headlines. Not opinions, not hype, mechanics. Let us keep going. Now let me show you the evidence, because everything I have said so far is theory without proof. And I do not want you to believe me because I said it. I want you to believe me because the data confirms it. Let us look at the correlation. Gold topped around 5,600 in late January. The dollar index bottomed around 95 at the same time. Since then, the dollar has rallied from 95 to 99. Gold has dropped from 5,600 to around 50,000. That is not coincidence. That is inverse correlation playing out in real time. When dollar goes up, gold goes down. When dollar goes down, gold goes up. Consistently, repeatedly, mathematically. Silver is even more dramatic. Silver topped at 121 when the dollar bottomed. Now the dollar is at 99 and silver is trading around 81.50. That is a 32% drop in silver while the dollar moved 4%. 4% move in dollar, 32% move in silver. That is the leverage effect. Silver amplifies everything. It amplifies gold moves. It amplifies dollar moves. It amplifies fear and greed and everything in between. A 4% dollar rally turned into a 32% silver crash. And people are blaming the war. The war did not crash silver. The dollar crashed silver. The war is the reason silver should be higher. But the dollar is overpowering everything. Now let me show you what happens in the physical market, because this is where the evidence gets really interesting. Major shipping routes are disrupted right now. 20% of the world's physical gold flows through certain hubs that are currently offline. Flights grounded, ships rerouted, insurance premiums exploding. When physical supply gets disrupted, what should happen to price? It should go up. Supply down, demand same, price up, basic economics. But the price is going down because the paper market is overwhelming the physical market, and the paper market is driven by the dollar. Physical premiums in Asia are at records. Indian dealers are paying full price when they normally pay discounts. The physical market is screaming that metal is scarce. The paper market is saying metal is abundant. The disconnect is real. And it always resolves in favor of physical. Paper can fight physical for days, maybe weeks, but not forever. Eventually, the physical reality asserts itself. And when it does, the snapback is violent. That is stored energy. That is a spring being compressed. And the dollar is the hand pushing the spring down. Now let me give you the two scenarios for what happens next, because we are approaching a critical level on the dollar chart. And what happens at that level determines everything. Scenario 1. Dollar gets rejected at 100. The dollar index has not been above 100 since January. 100 is a psychological level. It is a technical level. It is where sellers have stepped in before. If the dollar hits 100 and gets rejected, that rejection could mark the top of this entire rally. The dollar turns down. Gold and silver turn up. All the compressed energy releases upward. A 2% drop in the dollar from 100 to 98 could cause gold to spike 5 to 10%. Silver could move 15 to 20% in the same time. Because all the physical demand that has been building, all the supply constraints that have been tightening, all the war premium that has been ignored, all of it gets validated at once when the dollar weakens. The snap higher would be violent, fast, unexpected by most. That is scenario 1. Scenario 2. Dollar breaks above 100. What if the dollar does not get rejected? What if it breaks through 100 cleanly? What if the four forces I described earlier keep pushing? Then we have a problem. If the dollar breaks 100, the next resistance is not until 103 or 104. That is another 3 to 4% higher from here. Do the math. If 4% dollar strength from 95 to 99 caused gold to drop $500 and silver to crash 32%, what does another 3 to 4% do? Gold could revisit 4,500, maybe lower. Silver could see the 60s again. I am not predicting that. I am showing you the math. The inverse correlation has been consistent throughout this entire move. If the relationship holds and the dollar breaks 100 with momentum, those are the levels the math points to. The leverage effect on silver would be devastating. Every 1% the dollar gains above 100 could translate to 3 or 4% additional downside in silver. That is scenario 2. Both scenarios end with big moves. The only question is direction. And the direction gets decided at 100 on the dollar index. Watch that level like your portfolio depends on it, because it does. Now let me tell you what I am watching to figure out which scenario plays out. Because this is not random. There are signals. There are triggers. And if you know what to look for, you will see the turn before most people realize it happened. Signal 1, the 100 level itself. How does the dollar behave when it touches 100? Does it spike through and keep going? Does it touch and reverse? Does it consolidate and build energy? The price action at 100 will tell us everything. A rejection with heavy selling means the rally is over. A breakout with follow-through means more pain coming. Watch the level. Watch the reaction. Signal 2, central bank language. Any hint of dovish pivot changes everything. Any suggestion that rate cuts might come sooner, any acknowledgement that the war's economic damage is worse than expected, that weakens the dollar instantly. The market is currently pricing one rate cut in September. If that moves forward to July or June, dollar drops. Gold pops, silver flies. Listen to every central bank statement. Read between the lines. The pivot will be telegraphed before it is official. Signal 3, war developments. Real de-escalation, not rumors, but actual ceasefire, actual negotiations, actual progress. That changes the inflation equation. Oil prices drop. Shipping normalizes. Central bank gets room to cut. Dollar weakens. But if the war escalates further, we stay in this paradox. Gold should go up, but dollar keeps pushing it down. Watch for real developments, not headlines that get denied an hour later. Real change on the ground. Signal 4. Physical market premiums. If Asian premiums keep rising while paper price drops, that divergence is building energy. Eventually it breaks, and it always breaks in the direction of physical. The physical market knows something the paper market is ignoring. Pay attention to what real buyers are actually paying for real metal. That is the truth underneath the noise. Now I want to say something real. I know many of you watching right now are stressed. You own gold. You own silver. You have watched the price go down for weeks while the news gets worse and worse. And it does not make sense. It feels like the markets are broken. It feels like nothing works the way it should. It feels like you did everything right and still lost. But the markets are not broken. They are just doing something most people have never seen before. The dollar is overpowering the war bid. That is rare. It has happened before in history. But it is rare. And it does not last forever. The fundamentals always win eventually. The question is not whether gold and silver will reflect their true value. The question is when, and the when depends on the dollar. So do not panic, understand. Do not make decisions based on the number on the screen. Make decisions based on what is driving that number. And what is driving it right now is the dollar, not the war, not supply and demand, not fundamentals, the dollar. Once the dollar turns, and it will turn, everything reverses. The same leverage that caused 32% downside in silver will cause massive upside when the direction flips. The same forces that compressed prices will release them. But you have to be in position. You have to understand the mechanics. You have to not make the mistake of selling the house because the ruler changed. That is what this channel is for. Finance currency exists to make sure you understand the mechanics before you make decisions, not to tell you what to do, to make sure you understand what is actually happening so you can make your own choice from a position of knowledge instead of fear. Let me summarize everything. Gold and silver are crashing. Everyone is blaming the war. Everyone is wrong. The dollar is crashing gold and silver. The war is actually bullish for metals, but the dollar is overpowering everything. Four forces are pushing the dollar higher. Safe haven flows, frozen central bank, new tariffs, strong economy, all hitting at the same time. The dollar is at 99 heading toward 100. 100 is the decision point. Rejection means metals rip higher. Break means more pain. Physical markets are tight, premiums are spiking, supply chains are broken. The disconnect between paper and physical is building energy. That energy will release violently in one direction. Your job is to understand the mechanics. Watch the dollar. Wait for the signals. Do not panic. Share this video with someone who owns gold or silver and is confused right now. There are people in your life watching metals crash and blaming the war when the real story is the dollar. This video explains the connection. Help them understand before they make a decision based on the wrong chart. Subscribe to Finance Currency if you want to understand the mechanics behind the headlines. I break down dollar movements, physical market disconnects, and war impacts that nobody else is covering at this level. Remember what I asked earlier. How many children do you have? Would you advise them to invest in gold and silver? Where are you watching from? Drop that comment below. I read every single one. This is Finance Currency. The dollar is at 99. 100 is the most important number in the world right now. Everyone is wrong about why gold is crashing. Now you know the truth. Follow the dollar, not the headlines. See you in the next one.